All right, Skylar, we just wrapped up with Krista. Really fun call. A lot of good insights from Krista and the team at Grayscale.
Yeah, a lot of good insights, obviously, from her background, where she's been early on in the space, ETFs, how they evolved from a crypto perspective, the market in general, what Grayscale sees, long term from her lens. That was very enlightening.
Yeah, too excited about Hyperliquid. We get into that a little
Yeah,
bit. We talk about the Clarity Act,
tokenization.
um, tokenization. We get into MicroStrategy, kind of all the main hot buttons. Obviously, we talk about market structure, not so much structure, but just like the market's been shit for
Yeah,
crypto.
yeah. What's the long term
Just to
outlook?
be real about it.
Right,
Yeah, but she's super bullish. Her team's super bullish. I'm bullish. You're bullish.
100%.
But
Yeah, just infrastructure
yeah,
changes.
it was a fun interview.
Yeah, it was great. Just a good insight.
Yeah.
Topical and very interesting, kind of where things are going and just what they see. Obviously, with the Clarity Act coming full steam ahead, hopefully, very pertinent and timely.
Yeah. Yeah, we'll see. It could be a very positive catalyst for crypto.
Absolutely.
Awesome. Well, let's get into it.
Sounds great.
Thanks for tuning into the All Funds Network podcast. My name is Mike Schroeder. Today I'm joined by my co-host Tyler Steinke, and we are joined by Krista Lynch. Krista is the SVP of Global Markets at Grayscale. Krista, thanks so much for joining us today.
Thanks so much for having me.
Absolutely. Well, to get into it, I'd like to start with, tell us a little bit about your crypto journey. So you spent years at Goldman Sachs, BlackRock. You made the move to Grayscale in 2022. So yeah, really curious just to learn about your crypto journey and how you ended up at Grayscale.
Yeah, I consider myself to be pretty square. So going to crypto was a big jump for me. I started my career working in ETFs in various capacities. I spent the majority of that time at BlackRock working on fixed income ETFs. And fixed income ETFs have a very specific fund management technique. It's called stratified sampling. And it's effectively how creations and redemptions on the primary market, which is when new shares are created or existing shares are destroyed, are facilitated for those fixed income products. Now, sitting in that seat for about 6 years, I thought, I love doing this. I think this is really cool, but I want to build this technology for a new asset class. And at the time, crypto was kind of up and coming. It was a little edgy, and I started getting interested in it. Really kind of a fair weather friend, to be honest. But as I got more and more into it, I thought there's really something here. And I started kind of just tinkering with some friends on the desk about, what if we did this with crypto? And I got really hooked. And the Grayscale team called me, and the rest is history. They said, will you build the capital markets process for crypto ETFs? And there were no crypto ETFs at the time. So this was really quite a leap, but it's been a wild ride, and I'm so glad that I did it.
Love it. With maybe give us a picture of what Grayscale looks like today. I know a lot of people know it from, back over a decade ago, the GBTC products,
Yep.
but you guys are doing a lot more today. So maybe give us a picture of kind of what you guys are working on.
Yeah, that's exactly right. When I joined, we actually had no crypto ETFs, like I said, but GBTC was the flagship product. Grayscale actually invented GBTC in 2013. So going way back, it was a private placement vehicle and really one of the only tools in market to get access to Bitcoin at a time when things like opening wallets and other crypto native features of investment were very challenging. And so Grayscale had this vision to make it a more accessible asset class. Now, fast forward to where we are now, over the ensuing 10 plus years, we actually had to take quite a journey in order to achieve that. We sued the SEC. We argued that Bitcoin ETFs in spot format that invest directly in Bitcoin should be permissible given that futures-based options were available in market. We were successful, and alongside ourselves, we had a group of peers that were able to bring Bitcoin ETPs to market. Now, after that, pretty quickly thereafter, Ethereum products were also approved. And then, as we'll probably get into shortly, there was actually a set of rules that the SEC came out with last summer that gives a framework for how other crypto assets can be encapsulated in ETPs. We now have 9 individual tokens in ETP form. So we've really come quite a long way on that front. We've also been working on other ways to invest in digital assets, perhaps from an equity lens, for example, for those who aren't necessarily ready to go directly into crypto, but still want to have exposure. We have a series of 40 Act products, meaning equity based. They're equity thematics that allow investors to invest in publicly listed companies that have Bitcoin or crypto adjacent investment thesis. And then we also have some options-based strategies that allows for ways to get yield, again, not directly invested in Bitcoin, but invested in some of those derivative products.
Cool. With I got a couple angles we could take this. Maybe let's start with the Clarity Act. So Clarity Act, there's a lot of talk right now.
Yep.
Give us a lay of the land, kind of, for those that aren't familiar, maybe just give us a quick on it, and then we could dive into some specifics that are happening there.
Yeah, so Clarity Act has been an exciting piece of legislation for crypto practitioners because it would codify a lot of the rules of the road for how to proceed in this kind of next evolution of build in digital asset land. And so it's been, I think sometimes it can be counterintuitive that crypto builders want more rules, but it really allows for clarity, no pun intended, about what can be invested in, what can we build that will be compliant with rules and regulations, and then really just entrenching those rules and codification. So if a new administration comes into place, it won't be this whiplash that we've experienced in the past. Now, as we approach Congress's recess, it is unfortunately looking more and more unlikely that the Clarity Act will be passed at that time. I think maybe yesterday or the day before, Galaxy's head of research dropped their odds to about 50%. So a lot of people watching this are thinking that it's becoming less likely that it gets approved in the coming days. And I think that is unfortunately a little bit of a drag on the prices that we're seeing in market today. But again, we have to keep in mind that it is still a lot of progress. About 2 to 4 years ago, we never would be thinking that this wide sweeping legislation would potentially be taking effect. And the other thing that I think is really interesting about it is one of the big hangups has been on the ability for stablecoin issuers to pay yield. And this has really gotten a lot of traditional institutions involved in the debate and involved in some of the headwinds to passing the act. And to me and to the Grayscale research team, I think this is indicative that we see these kind of big legacy behemoth players really getting involved and really paying attention because digital assets could potentially be a threat to their business model. And to me, that indicates further positivity and further momentum for the asset class, even though it might be a little bumpy along the way.
Absolutely. And with that, I guess with the yield is this something that uh, how do you think the banks are gonna kind of work with the yield aspect of stablecoins?
Yeah, I think the big threat there is that if the stablecoins are able to pay investors a yield, it really detracts from why one might put their assets in a bank that is paying some sort of very de minimis yield, but the bank is probably keeping the majority of it. So it is in some ways a competitive threat to that business model. And I think that's why we see them coming in with such heavy-handed care on this particular aspect of crypto build. Just a few years ago we were hearing them kind of dismiss it, and now it's something that they're willing to really get involved from a lobbying standpoint. So again, to me, I think it is indicative that they're paying attention because this is real and this is something that's going to revolutionize how we think about modern banking.
Yeah, definitely a big change coming forward for sure. What we see, I guess, along with that change, Krista, what do you see from an infrastructure point of view? What's changing in real time, and what are you excited about? Whether it be clearing, settlement, private brokerage in crypto, digital assets. What are your thoughts there?
Yeah, I love this question because I think for me, a lot of the focus we had in the past year and a half or so was really on what token are we going to bring to market next. And that was very exciting for a period of time. But as we get to the ninth, 10th, 11th asset, it's still exciting, but there's less novelty to it. And so, what we spent a lot of time on recently is really more infrastructure build. And I think that's where we're seeing a lot of adoption right now behind the scenes as prices are depressed. For example, we see stablecoins being used potentially as a way to transmit cash in a much more efficient and 24/7 manner. For ourselves on the ETF front, we're seeing a lot of interest in features like in kind, the ability to put assets directly from an individual holder's wallet into the ETF in order to access some of the benefits of the modern banking system in the traditional sense. So, being able to use your Bitcoin for collateral, as an example, we've actually had investors say, "My bank will give me a better mortgage rate if I can take my Bitcoin, put it into the ETF, and then put it into my advised account. And so we're seeing a lot of interest, I would say, not only from end investors, but also from those advisors and those kind of traditional institutions in bridging the gap for that reason. And in order to do that, it's all about infrastructure. So we've spent a lot of our time in the past year or so building out the capabilities to facilitate those types of trades. We've seen the banks having increasing interest in using things like stable coins to facilitate behind the scenes payments. And then we're also working on things like staking, which allows investors to generate yield. Yield is, of course, a big buzzword in crypto land, and we're able to offer that on existing products by building more of this infrastructure behind the scenes.
Yeah, absolutely. A lot of exciting things happening in real time, right?
Definitely.
From a Grayscale point of view, I mean, you're obviously getting in the ETF space. Looking ahead, do you think ETFs are the end state, or are they ultimately a bridge to better things coming along? Like, we talked about a bridge to a future where securities themselves are issued and traded on blockchain rails like tokenization. What are your thoughts there?
Yep. Yeah, this is a huge topic of, I would say, debate. And also, at times, it can get a little bit, there can be frictions involved. I myself, as an ETF practitioner, think that ETFs are going to be around for the long haul. I think you look at mutual fund conversions, and we're still seeing people that don't have experience with ETFs, I should say issuers that don't have experience with ETFs getting into the game. So I think this is going to be something that persists by something. I mean, ETFs, I think they're going to persist for many, many years. But that said, I have been to a number of crypto oriented conferences where the topic of discussion is something called a vault traded fund. And that's effectively an unwrapped ETF where you put the underlying assets into a token. And in that way, you're really able to get creative. You're able to crowdsource a lot of ideas. You're able to have more, I would say, continuity between the investor and the issuer. Of course, the question becomes, where's the line between having so much transparency and having appropriate regulations? And I think, that's where we really see the crux of the debate. So I go to a lot of traditional conferences. I go to a lot of crypto conferences, and there's definitely opposing viewpoints, but the convergence is really something that's starting to take hold. I think both sides kind of acknowledge now that they do have to meet in the middle to some extent. And so we see things like Clarity potentially charting the way for that.
Do you see tokenization continuing to, I don't know, proliferate?
I'm personally a big believer in tokenization. I know some kind of imply it's a buzzword, and we've seen buzzwords come and go, but I see real utility in it. And I like to liken this to stablecoins. So if you think about the discussion around stablecoins as recently as 2 to 5 years ago, again, people were like, why do I need this? It's just digitized cash. And what does that add to my life? But now we just talked about how banks are able to move assets 24/7. They can move things much more efficiently. And there's real dollar savings to that. They do not have to have as much back office personnel. They do not have to have as much infrastructure in order to facilitate this. And I think that tokenization of equities and other traditional securities next is going to be kind of the next wave of this. I think eventually we could get to tokenization of real world assets. We have to take some baby steps, but I do see these things progressing very rapidly. And again, just using how the dialogue has evolved on stablecoins as a barometer for where this might be headed for other assets, I could see it really taking hold and moving quickly. And the last thing I'll say on that is we've conducted a number of surveys on who are buying these assets, what is the investment experience of different generations. And we find that younger investors oftentimes have their first investment experience with digital assets, whether that's a tokenized asset or an actual crypto asset. But they really expect some of the features of digital asset investing in their holistic investment experience. When they can't trade something on Saturday, or they can't get their cash out to pay for their coffee, that's that's perplexing to them. And the way that you're going to be able to do that for Apple stock or for other traditional equities is by tokenizing it.
Yeah, that's a good point with the younger generation. The
Right.
well, it's so easy to give somebody a, some Bitcoin, and like, it could be a 10-year-old
Right.
versus like I don't know how to give somebody a stock. I'm sure there's a
Right.
way, but
I was traveling abroad with a friend actually who does not live in the US where I'm based. And we were trying to figure out how to settle up our Splitwise account. And she was like, "Do you have a bank account in this currency?" And I'm like, "No." She doesn't have a US bank account. And we actually settled in crypto because it was one way that we could do it, kind of bridging these different countries, bridging the different financial systems. And to me, it was a very gratifying way to see this asset class at work.
That's fun. She pay in
Yeah.
Bitcoin or stables?
In Bitcoin.
Wow. That's awesome. Very cool. Kind of going back to the ETF conversation, just real quick here. Obviously, being at the forefront of that and kind of seeing what's happened, what surprised you most about the institutional demand since the spot ETF approvals?
Yeah, it's been a landslide. And while I expected the ETF to make it far more accessible to get access to crypto, I didn't necessarily think it would unlock so many investors on the sidelines. We often, as ETF practitioners, love to talk about how ETFs make different asset classes and different complex trades more accessible to investors. And so it was no surprise that it would open up some doors, but the landslide that we've seen come in has really been tremendous. And just before this, I was looking at some metrics. The Bitcoin ETFs right now stand at a little bit under $75 billion in assets under management. And for context, that's about a third of the size of gold ETFs. Gold ETFs have been in market for over 20 years, and Bitcoin ETFs have been in market for less than 3. So if you just think about averaging that out, we could eclipse the size of gold ETFs in a much shorter amount of time if you just play that forward. And I think part of that is because if you think about gold, while I personally don't really want to figure out how to put gold bars in my home, it's easier to get access to gold. You know, you can have jewelry, you can have other ways to invest in it. But Bitcoin, you have to open a digital wallet. You need to do these things that are very daunting if you don't have crypto native expertise. And I think the availability of crypto ETFs has really allowed investors to comfortably delegate that to issuers like Grayscale.
Yeah, 100%. Yeah, that definitely makes it a lot easier to buy, and you don't need to worry about, like, to your point, you don't need to worry about like the custody aspect,
Exactly.
which I think is huge for investors. So kind of talking about markets today. Today S&P 500 give or take is up 15%. The Nasdaq's up 20% this year. Bitcoin altcoins have severely underperformed. What's happening right now? From your perspective, what's the state of the market in crypto?
Yeah, we've been looking at a number of macroeconomic indicators, and actually, the outlook for rates has been a big component of that. I think this kind of speaks to the maturation of the asset class, where some of our leading indicators are things like hawkish or dovish Fed sentiment versus what's going on Reddit. So, while we don't love to see the prices lower as they are, it's also been a very orderly sell off. In past cycles, we've seen this be much more abrupt, much more volatile. And we have seen the price of Bitcoin halve multiple times. And so I think while it can be very disconcerting for investors in the asset class, it's not something that we haven't seen before. I think we are waiting for the next big catalyst and in the background, really building some of these infrastructure plays like what we talked about. Now, what will be that next catalyst? I think that remains to be seen. We're very hopeful that the Clarity Act will pass before the recess, but it is unfortunately looking increasingly more and more like that might drag on. But I will say the price of gold also down. We're in good company with other similar assets. And so I think while we don't love to see it, it is something that crypto investors have weathered before. And we do have a lot of new investors in the space. So I can definitely understand why they might be not as familiar with the kind of angst that it can induce. But I think we are still very constructive on the asset class and feel that it will rebound over time.
Yeah. It's I mean, especially with altcoins have been kind of beaten to death. It's been we were all kind of like looking forward to like maybe seeing an alt season, maybe end of last year.
Hoping.
That never came. We're still kind of waiting for it.
Yeah.
Do you think there's like I mean, do you think it's a lot of it has to do with like AI kind of just sucking in capital?
That is something that a lot of our trading partners have expressed, is that now we're competing with things like AI investment, where Bitcoin and other digital assets used to be this shiny object of, alternative investment. And now we are really up against a lot of different themes in the investment landscape. But I think we would be remiss if we didn't touch on Hyperliquid, which is having its moment in the sun. That's one
Right.
particular altcoin that we've seen a lot of demand for. It's shown real utility in a lot of the events going on around the world, and its ability to offer 24/7 trading. Again, one of these features that I think we're going to start to expect universally. And so that's been something that we've been very positive about. We focused a lot on. We actually launched a product a couple of weeks ago that is a Hyperliquid product, an ETP, a way to access it. And it's been a very popular cohort of crypto ETP, I think largely because people are looking for what is going to be the exciting alt, given the
Mhm.
downturn in alts broadly.
When I wanted Bitcoin before, I would, go to Coinbase, whatever, an exchange, I'd buy it there. And my money was like in the crypto universe where, it's not really leaving. Like I'm not going to convert it into cash and put it back in my Charles Schwab account.
Yep.
Instead, it's more kind of just like it's leaving there, and maybe I'll, buy an NFT with it or whatnot.
Yep.
Versus today, actually, and I mean, this is kind of my mindset, and I'm sure a lot of other investors maybe think this way, but I'd rather keep my money in my Charles Schwab account where I know it's safe.
Right.
I get leverage kind of on demand if I want to, utilize it. I guess it could be done in crypto too, but do you see what I'm saying? Like
Yep.
people are not going into the crypto rails as much. Do you think that's maybe having an impact on like price as well?
So one thing I would say about that is the crypto ETFs actually buy the underlying asset. So my team facilitates these creation and redemption transactions, which means if you are buying shares in your Schwab or Fidelity account, that's on the secondary market. That's shares that currently exist in the marketplace. But there's these behind the scenes facilitators called ETF market makers who are helping to facilitate that. And as Schwab or as Fidelity, as more providers have to go access those shares, ETF market makers will sell to them. And as they do so, they will become short. Now, eventually, once they've aggregated enough of a short position, they'll need to cover that. And oftentimes, they'll do that in what's called the primary market, where they'll actually go directly to the ETF issuer and say, I need to exchange the underlying asset for shares of the ETF. Now, typically for Bitcoin and Ethereum, et cetera, ETFs, this is done in cash. Now, my team will actually go out and spend that cash and buy the underlying asset. So, although you might not necessarily be buying the crypto, the ETF still is. And in that way, there's kind of this one for one parity with your demand for crypto resulting in a purchase of crypto. Now, the crypto ETFs or the Bitcoin ETFs specifically have had about $7 billion in outflows over the past month. I think that's the June month to date number, which is really quite large. And as I said, this is going to result in a sale of Bitcoin. So we have seen Bitcoin exiting the ETFs, hitting the markets. And from a supply demand perspective, that does result in more supply in the market. I don't think that helps the price, but again, it's been very orderly. And I think that's overall something that we're very pleased to see is that although the market's been absorbing about $7 billion in outflows of ETFs, it is still holding steady. It is declining, but it is not precipitous. It's not volatile. It is something that really appears pretty mature.
Yeah, it's very interesting. Going back briefly to the Hyperliquid mention you had, talking about the DeFi platforms coming up. As those types of platforms kind of mature over time, do you see that as more of a complementary situation going forward for you guys, or more of a competitive on-chain capital market activity?
Yeah, I think it's complementary. I think if there's any competitive element to it, I think it's going to be these features that become demanded by investors. And that's really more something that exchanges are going to have to deal with. They're going to have to figure out how to offer 24/7 trading. They're going to need to offer instant settlement. And then things like perpetual futures, which are very popular on the Hyperliquid product. That's going to be another feature that I think will be really interesting for investors. And we've actually seen some early filings from exchanges to potentially consider how they can host this once very crypto native derivative way of trading.
Do you see perpetual futures? Do you see those expanding within the market? And kind of how do you see traditional Wall Street derivatives versus more on-chain derivatives evolving over the coming years?
I do think perpetual futures will continue to be an interesting way for investors to access various exposures. Like I said, they were traditionally something that was more crypto native. You really thought of perpetuals, or at least my team would think of perpetuals as a way to get Bitcoin, Ethereum, et cetera, exposure, and then it kind of stopped there. But with the recent events that happened in the Middle East, we saw oil perpetual futures being very, very popular. It was a way, one of the only ways to express risk about events going on weekends, on holidays. And investors really didn't want to have to wait until Monday morning, potentially 48 hours after breaking news, in order to put on or take off risk. And so oil perpetual futures really kind of blew up in a good way as a way to express risk over these weekends and holidays. Now, since then, we've seen perpetual futures on things like the S&P 500, other very traditional, very vanilla exposures. And so I think the direction of travel is that continuity. I think we're going to continue to see crypto native vehicles bringing traditional exposures, and also traditional providers bringing more crypto native ways to express that via things like the perpetual future. Now, how could this evolve for the traditional banks? I think it's possible that eventually we'll see them offering both. I don't necessarily think that this will take over the role of the more traditional listed futures, but I do think it's going to be something that investors potentially want access to. And if you think about the role of banks, they often serve the function of helping investors get access to things that are not widely available. So this could actually be a very good area for them to explore if they do want to build in it, and how much they want to do so.
Let's talk a little bit about AI. It's a question we love to ask. Talk to us about how Grayscale is using AI in particular. Maybe your job, day to day, or the company as a
Yeah.
whole.
So I think AI, it's adjacent to crypto in the sense that it is a disruptive technology. And I think that we would be remiss if we weren't implementing it in some way. I view it almost as a language. When I was at BlackRock, we spent a lot of time trying to train everyone how to code in Python, because we thought that that was going to be a necessary skill. And I almost view ability to interact efficiently with AI in a similar vein. So something that we're doing is trying to become what I would call AI literate across the firm. We don't necessarily have any explicit products, although we are working on some that would be oriented towards AI, not yet available in market, but we do have some filings that you can see on the SEC's website. But I think from a practical or tactical standpoint, we are making a push to train ourselves and our colleagues to be able to use AI to be efficient, and to really harness our own abilities to progress different products, to be effective, be efficient, and really lean into this developing technology.
Yeah, you get it on maybe on the trading side. Are you guys using AI in terms of like execution, or a large scale institution order routing, things like that?
Yeah, so we are working on implementing systematic ways to trade. It is actually, this speaks to the journey of Grayscale and how far we've come in the past few years. But when we first joined, or when I first joined Grayscale, keep in mind, we didn't actually have any crypto ETFs in market. No one did. And so we started off with just one fund that launched, and now we have maybe 12, 15. And so we have been trying to scale this very efficiently and effectively, and that does involve implementing different softwares and technologies. Now, AI is not explicitly a part of that yet, but that's not to say it won't become one. And we do use AI for different, I would say, trading adjacent features, like trying to understand patterns and behaviors in the market. We have a quantitative team that spends a lot of time looking at data mining, trying to understand what's going on in the market. And they are very heavy users of AI. So they would be using it to help be, like I said, efficient, effective in understanding what the market is doing. And then how can we deliver strategies on top of that to our investors to help them capture some of that?
Awesome. Very cool. Anything you're excited about going forward, I guess, markets wise, or just something you're seeing that's pretty interesting that we haven't talked about at this point?
I'm excited about tokenization personally. I really think that the way that tokenization operates with the mint and burn of assets is very similar to the creation redemption cycle of ETFs, which is what I've spent most of my career on. And so, as a kind of ETF nerd, I see a lot of parallels towards where tokenization from an operational and technical standpoint could develop. And I think that the ability to potentially crowdsource things like the contents of the ETF via some of these tokenized wrappers is really exciting and interesting to me. I actually spoke on a panel at Consensus where I interviewed a vault traded fund host. And it was such an interesting insight into all of the different things that are possible that I hadn't even thought of yet. And from that point on, I've really been a true believer. And this is something that I am happy to spend my weekends reading about. So that's something I'm very excited about. I want to see how it progresses in the coming weeks, months, years. And I would not be surprised if in 5 years we're talking about vault traded funds in a very, it's here and we accept it kind of way.
Yeah, vault trading funds are a big topic that I've seen as well. My side too. That's not going away.
Yeah.
Very exciting.
We'd be remiss if we didn't ask you about MicroStrategy.
Yep.
It's kind of like went to hell recently. It's a lot of people are saying things on X. Give us some of your thoughts on MicroStrategy, or maybe even just like DATs in general. Do you guys see them competitive as ETFs? And maybe we can walk down the MicroStrategy, path, but we'll start there at a high level.
Yeah, I think DATs broadly we view as somewhat competitive, but also complementary at the same time. They are ways for investors to get access to digital assets that they do not necessarily want or are able to invest directly in. And so if you want exposure, we'll use Bitcoin as an example. If you want exposure to Bitcoin, but you don't want to open a wallet, your options become get an ETF or get a DAT. Now, before the ETFs were approved, I think the DATs had more logical utility, and also before features like staking were approved. Because if you think about Ethereum investment as an example, where it's a proof of stake asset, if you can't stake those assets, a lot of investors logically said, well, now I'm not going to get my yield. So I'm going to go to a digital asset treasury that doesn't have as many rules around what it can and cannot do. So it can take on leverage, it can stake its assets, it can do a lot of different things as its governance sees fit. The ETFs are very rigid. They can only invest in one thing and one thing only. And so I think if you want to get pure play exposure, then you should go with an ETF because from a governance standpoint, all it can do is invest in that single underlying asset. It can stake the asset, but it can't have other derivative forms of the asset. It can't leverage the asset. You really know exactly what you're getting, and it's extremely transparent, and it won't change based on a management decision. Now, the DATs, I think, are still interesting for assets that have not yet been approved in ETF form, or if you're really looking for leverage, I could see why one might gravitate towards it because it can take on those types of stances. But as we've seen in the past few weeks, that can be detrimental. I think when things are up and to the right, there's a lot of positivity around it. But when things are in the current environment that we're in, I think that there's a lot of benefit to the kind of slow and steady buying exactly what you think you're buying, which is the 33 Act Grantor Trust that's invested exclusively in that underlying asset.
Yeah, do you see when it comes to like MicroStrategy in particular, like the stretch product, which is meant to be a yield product, trading at par, it's down 17%, give or take. It's trading at 80 instead of 100. Do you see like potential like market? Do you think this can impact the market negatively? Almost like a kind of a death spiral, like we saw like pre-COVID.
Yeah, I liken it sort of to GBTC before it was approved to be an ETF. And the reason for that is because GBTC in pre-ETF format could only be created, it could not be redeemed. And so when things were very positive, you see premiums, and that is oftentimes reflected or digested by the market as a positive. Now, as an ETF purist, I would say a premium is actually an unhealthy indicator. Typically, you want the product to be trading at its NAV to demonstrate that it's doing what it's supposed to be doing. Of course, MicroStrategy does have some other goals, and so I wouldn't say it's broken. But with GBTC, we saw that it was very positively received in the market until that supply demand dynamic really could no longer be met because there was only the ability to create and not to redeem. Now, at that time, we saw the products dropping to discounts. We saw investors very upset. A lot of the narrative that had been quite positive about the premium flipped to quite negative about the discount. And so I kind of see this as a very similar dynamic where things are up and to the right. Like I said, the investor's not asking a lot of questions about why is it trading at a premium? That's just good for them. But it's actually not, because it does indicate that the product is not properly tracking its underlying asset, as we saw with GBTC. And that was really why we pushed for it to become an ETF. That's why we went to the lengths of suing the SEC, because we wanted to be able to deliver exactly what we said we were delivering to investors. So not that there's anything wrong with the MicroStrategy strategy, but there are risks to taking on these kind of, I would say, bells and whistles to the underlying investment thesis. And while it can be very exciting and exhilarating on the way up, you have to ask yourself, why is that the case? And will it flip on the way down?
Well said. Um, any notes from your end on institutional adoption in the space?
Yeah, we've seen a lot of institutional interest. We have been chipping away for years on a lot of advisors who I would say flipped their kind of approach to crypto investing from I'm not even going to take your call to will you please call me and can we talk about this? Will you come to our office? And so it's been very exciting in that way. I often say I used to be the person that would go to these conferences and like talk to myself in the corner. But now when I go to a conference, we're just swarmed with advisors who are trying to understand how can they get access to this asset class. And so that's very encouraging and rewarding for us. I will say I've been very positively impressed by their diligence processes, which have in many cases taken 6 months, 9 months, 12 months. And so we are just starting to see some of these approvals come through while we've been working on them for many, many years or many, many months in the background. And so I think it is something that is very top of mind for advisors. Like I mentioned, with the ability to in kind into these products, there's a lot of benefits for them. They might be able to take assets that their clients currently hold, but not within their advised account, and put it into that kind of assets under management. The client is able to get tax planning, they're able to get margin, collateral, other benefits, and the advisor is able to help them do that and, of course, collect a fee. So it is very mutually exclusive, or I should say mutually beneficial. And we've seen a lot of interest in that from the institutional and advised community.
Yeah, I would think it's probably a good time for a lot of these institutions to be buying.
Yeah.
Or I don't know
Right.
if they'll, more folks will like kind of wait till the price goes up until they FOMO in.
Yeah, I think
Yeah.
that is definitely something that we see. I myself fall victim to it where I, maybe sit on the sidelines for too long and then I'm like, "Ugh, I should have done it." And I work in the space, so I understand why there can be trepidation to get into it. But like I said, we really are long-term bullish and we view this as just kind of another cycle on that road to overall price increase.
Yeah. On that point, Krista, you talked about just the due diligence process, obviously being in the space for a while. How has that changed over time? I know sometimes it takes a long time for others to kind of get into the mindset of
Yeah.
what this looks like, but yeah.
I've been very impressed by the level of technical detail that we've gone into on a lot of these questions. It ranges from walk me through how your custody process works to what your insurance looks like to explain to me exactly how a validator for your staking tokens works. And so we will spend many, many hours with advisors and with their due diligence teams to help them get comfortable with our product lineup. Another thing that we've done to kind of kickstart these conversations is we actually go around the country and we go to different cities of interest and host something called Crypto Connect. That's a way that we're able to help advisors have initial conversations, understand our product lineup, and really get a hook. Who can they talk to at Grayscale, establish those in-person relationships. And we've gone on our US tour of maybe 15 different cities. It's been very, very encouraging. It's a half day kind of seminar of sorts for advisors to come to. They get credit for CPE, CFA type credits. And it's a way for them to really connect and understand what products are out there. Questions range from the very, very basic to the very, very technical. And that's a way that we've also been able to help grow institutional engagement with Grayscale and with digital assets broadly.
Very exciting. That's really
Yeah,
interesting.
very cool.
Yeah.
Awesome. Well, Krista, as we wrap up here, any final thoughts? Anything we haven't covered yet that you're interested in speaking about?
Let's see. I'm trying to think of what else is really exciting. I think maybe we should touch on multi-token products. So they haven't necessarily taken off from an investment standpoint yet, but I think that they could be another kind of way of the future. We're optimistic that if you build it, they will come for these products. But to
And is
just
this
elaborate,
the multi-token? Is this like a basket or
exactly.
index?
Yep.
Yeah.
Yep.
Yeah.
So to elaborate a little bit more on our product, we have it's ticker GDLC. It's the Grayscale Crypto 5 Index. And it's the top 5 tokens by market capitalization, excluding meme coins and excluding stable coins. And we've measured that it's actually able to provide access to about 90% of the returns of the crypto landscape with this one single ETP investment. So as more and more products proliferate, like I said, the generic listing standards that were issued last summer have really made a number of tokens accessible in ETP form. And for investors who don't want to try to pick individual tokens, but they're ready to move beyond Bitcoin and beyond Ethereum, I think this is a very eloquent way to do that. We think it could become like the S&P 500 of crypto. And so for that reason, I'm a big believer in it. I personally think that it's a very streamlined way to access the returns of the crypto landscape broadly, if that's what you're after, without having to do your own rebalances, without having to buy 18 different ETFs. It's a very streamlined way to get access to the broad crypto market.
Yeah. I love it.
Yeah.
Is it when it comes to 5 coins? So I guess 5 coins just kind of cover, you mentioned about like 90% of returns. So that's kind of the thought process with the 5 versus 20 here.
Yeah, exactly. And there are other products that offer broader exposure. And I think that will be something that we see more of in the future. But if 5 can get you to 90%, there becomes real, I would say, operational frictions to introducing a lot more tokens. And so this is a very efficient product that's able to get you very, very close to the whole landscape. And I think that that's a very compelling product, especially as we head into the future with more and more individual tokens available in ETP form. It can just be very overwhelming for investors who are not familiar with this space, or perhaps they've gotten familiar and comfortable with Bitcoin and they want to move past that, but then they kind of have this analysis paralysis.
Yeah. Is there any specific tokens that are interesting for you?
I think Hyperliquid is very interesting. I've spent a lot of time working on our Hyperliquid product over the past few weeks. We actually had a massive inflow to it over maybe end of last week that we worked very hard on. It's all publicly disclosed, but we worked with a consortium of investors who are all, I would say, themselves Hyperliquid enthusiasts, and just seeing the community really believing in it and standing behind it, I think has been very exciting for me. And then to actually be able to facilitate that flow was, we worked on it for a long time, but it was great conversations. We met a lot of really interesting people, and it's really made me believe that much further in Hyperliquid as a token.
Yeah, maybe for those that are familiar, could you just give them the quick on Hyperliquid?
Yeah, so Hyperliquid is often associated with these perpetual futures. It's a venue or a decentralized exchange on which they trade. And like I said, perpetual futures are this sort of previously crypto native investment tool. It's a future that never settles. It continues to roll on a daily basis. And it's become a very popular means of expressing exposure on a wide range of underlying assets like oil, S&P 500, traditionally crypto assets, but now really spanning that universe. And Hyperliquid is the venue on which these traditionally trade. So Hyperliquid as a token, I think, is a way to express interest or express positivity on that continuing to build and evolve, which I think it will.
Yeah. I love it. I know in particular, they had like Canton before Canton was, released on exchanges, SpaceX, which more people are familiar
with. Yeah, it's being
really
viewed,
cool.
I think, as a price discovery vehicle. So before something goes public, it can be traded in this format. Like I said, 24/7. If something's not trading on weekends or holidays, it can be a price discovery tool there. We love to talk about ETFs as price discovery tools. So I do see some parallels there as well. And I think just having the token available in ETP form is very additive to the ecosystem overall. And that fund is Hype G. That's our Hyperliquid product.
G, love it.
Very nice.
Awesome. Well, Krista, this has been a lot of fun. Really appreciate you joining us and sharing your insights with us. Where could people go to connect with you and learn more about Grayscale?
Thanks so much. Yeah, I loved you guys letting me chatter on about my favorite crypto topics. Grayscale.com is a great resource. You can find our contact information there. And I would say, don't be shy. We love to hear from investors. We love to hear from people with questions, and we're very open to fielding anything and everything. So don't be shy about reaching out.
That's awesome. This has been great, Chris. I'll make sure to put all your contact info in the show notes as well.